Welcome to another episode of the Creative Power Hour. I'm your host, Marcus Whitney, and today I've got David Bailey.
Hey, I'm David.
So I always like to start these shows with a bit of an origin story. And usually I would have manipulated your name and given you like a superhero name, but like just with your initials being D&B, I either would have chosen like Distributed David or like Bitcoin Bailey, and I was like, he probably would like smack me if I did that. But like that's kind of been your life for at least the last 5 years. So I'd love to hear just a little bit about your experience growing up with the internet and how that led into you getting to be having a front row seat at this new wave of technology and innovation.
Well, so I approached Bitcoin really not from a technology perspective initially, but more from a financial perspective. As a kid, I was a really big nerd around wanting to start a business, around how money worked and banking. I used to play bank as a little kid. I grew up around my parents who ran a small business, which is probably where all this came from. Mm-hmm. But I would, as a little kid, just spend hours making counterfeit money and going around trying to spend it around my household. Hey, here's $1 million. Let me get a juice. So I have always been a finance nerd, and when I got into high school, I started investing summer before my freshman year of high school. And I started with $3,500, and my parents matched me. They gave me another $3,500, so I had $7,000 to start investing in the stock market, which I thought was pretty hot shit doing that. Okay. I also was getting in at like the best time in equity markets in a really long time. And so my first investments just were in like Apple and Google and a lot of stuff that as a kid you just do because you're interfacing with these things. I got really lucky on. And so during high school... Do
you remember the prices that you were able to get those things at?
I bought Apple shares at less than $60 pre any of their splits.
Wow. Before the splits.
Yeah, before the splits. So, a bunch of stuff. And, at the time I thought, all right, I'm trying to do a lot of reading and learning about how the stock market works. And I think it's just because I'm like so gifted at this or something.
Yeah.
Really, I'm just, being totally lucky.
Yeah.
But I turned that money into over $250,000 during high school. And my junior year...
I just need to take a second.
Yeah.
Wow.
Yeah. Okay. This is also this is what can happen when you don't believe in really diversification. So you just go all into something, you grow it, and you go all into something. Yeah. So this is happening. And then during, I guess, my junior year of high school, bank stocks had started to go down. This was maybe 2007. Mm-hmm. And banking stocks had started to go down. And I'm, watching the news every day and hearing all the CEOs of all these banks talk about how, this is a great time to invest in the banks and that, this housing crisis is just a temporary thing. And so I start buying bank stocks when they're about 20% plus down from their peak. And I keep buying as the prices keep going lower and lower. And, one of the companies I was put a major investment into, Regions Financial, I started buying shares of Regions at like $32. And I think the last shares I bought in Regions was $2.80. I lost a lot of money in a short amount of time. And that kind of kicked off maybe it was like, I was so naive that this is why I went on this quest, but it kicked off what the hell just happened? How did I lose all this money? How did no one else see this coming? How did all of these people followed...
You were watching TV, I'm sure on the internet, so you were doing research.
Oh, right? Yeah. I read 100 books on the investing. Every day is like consuming. I'm an obsessive person about things. So, and when you have like the CEO of Regions Financials get on TV and say, we've never been healthier and things are going fantastic. Right, and then, 60 days later, it's like, yeah, we might be done.
Right.
it's like, all right, well, what do you know now that you didn't know then? And so it kind of shattered my perception of the world as the inputs that we use to make decisions as being true. And it sent me on this quest to find out what happened and what I could do differently. So that quest over college, I spent all 4 years of college trying to figure it out. And turns out a lot of people did see the financial crisis coming and were very articulate about why it was going to happen and, you know, said these things very early. I think I came across a video of Ron Paul talking on like the House floor in like 2001 about how subsidizing lending housing, it was going to lead to a housing crisis. So I'm like, how did these people know this? And they all share a common worldview of how the world works and a belief in Austrian economics, which is really classical economics, like true laissez-faire, hardcore capitalist economics. And it introduced me to a world of people like Hayek and Mises and, you know, all of these old school economists that won Nobel Prizes, but now are kind of not appreciated because their economic analysis is misaligned with popular modern day economics, Keynesian economics, and kind of a different worldview that came after the Great Depression. So I'm learning about all this stuff for the first time. You know, I'm the Eurozone crisis is going on, which is kind of giving me tons of flashbacks. And one of my friends that I had worked with, I had done internships every year in the financial markets. And so one of the people I worked with sent me an article about Bitcoin. And I was kind of just in the right place to start the diligence process on Bitcoin. But when I first got the article, I thought it was a scam. And so I went in to try to show my friend that it was a scam and why Bitcoin couldn't work. And I had like a whole list of reasons why it couldn't work and just started investigating. And at a certain point in time, it became clear, like, there was a valid answer to each of these issues, and I couldn't tell you why it couldn't work. And so that's when I decided that I should make my first investment into Bitcoin. And this was late 2012. I bought my first Bitcoins at just under $8. And I was actually scammed on my first Bitcoin transaction. So I tried to buy 1,000 Bitcoins for $8 a pop, and they only sent me 400 because at the time you had to like go and deposit cash into someone's bank account and just pray they sent you the Bitcoin. There was no infrastructure to get any of this stuff. And that's also where I learned the valuable lesson of Googling everyone's name before you do business with anyone. Yeah, like as soon as I Googled his name, I was like, oh, I shouldn't have done that first. So, yeah, so that was kind of my first stepping into it. Okay. I also, when I was in college, I started a nonprofit that did micro lending in the United States. So I also had a weird background of knowing how broken the existing financial system is for most people in the world. I mean, the vast majority of people do not have access to financial tools. They don't have access to capital markets. Less than 5% of the U.S. population doesn't have access to capital markets. Much less, you know, the Vietnamese population of the world. So I feel like I was just really lucky, right place, right time, to be able to appreciate the technology maybe faster than other people should have. Then I start buying more and more Bitcoin, and in January 2013, the first Bitcoin bubble that I experienced starts. And the price goes from $13 like the first week of January to a high of $266 that I think it hit on April 8th. Wow. I can remember this like very well because that's like what, 20x in the price. And you know.
And how much did you have that time? A lot.
Enough that I was not going to school. I was like, you know, I mean, it was crazy. I mean, there were nights that I went to sleep and I woke up and I had made years of income in one night. In a night. And I'm just like, school seems kind of irrelevant right now. So, I mean, anyone who really gets into Bitcoin can tell you that, like, once you start going down the rabbit's hole, you you get plunged into a dark place for a while. Like you just start consuming all of the information that's out there.
Yeah.
And so I spent a few months doing that. And then ultimately ended up deciding to not go into working in financial markets, which is what my degree's in, what I had been planning to do for 10 years. What my parents were not very pleased about it. But I thought I should go all into Bitcoin. I had a couple years of money. Let's just see how this thing goes. And I went to the first Bitcoin conference in San Jose 2013. And I was so blown away by the caliber of the people there. Like all of these like amazing engineers that had like called in sick to work so they could sneak out and go to this Bitcoin conference. I was like, all right, that's a bullish indicator. And so I just said, fuck it. Can we?
Yeah, absolutely.
Okay,
absolutely.
All right,
Absolutely.
so
yes.
Fuck it. Just dive all in 100% and
Yeah.
let's just see what happens.
Yeah.
And I've been on this roller coaster ever since then.
Man.
And that was May 2013. And then, you know, the next bubble came and we went up to about $1,000, crashed all the way down to 200. Then, you know, we've just gone through another bubble.
Yeah.
We went all the way up to 20,000 and now we're sitting at about 3,500.
Mm-hmm.
And every month I think it can't get crazier and it can't get faster and it gets crazier and faster. So, yeah, so that's the origin story. In terms
Man, I'm glad I asked. That's a hell of a story, dude.
So, and you know what's funny is almost every person who's in Bitcoin at least in the early days, all have an interesting origin story because it was not in a place where you could just any sane person could stumble across it and like take it legit and jump into it. You know? So when I got into the space, I had zero technology skills. I had some finance experience, but that was becoming, you know, there was more and more finance guys coming in every day. And so I knew I just needed to dive in as much as I could, and media was a good place to do that. And so we started a magazine called Why Bitcoin, which was a print publication, which should show how little I knew about anything. But we started and we just hustled hard. And because we did things that were innovative at the time, like answer phone calls and respond to email, our business took off. You know, most of the people in the space at the time were complete amateurs that were just, you know, not good at that business at all. So that media company, we were able to grow and quickly figure out we need to get out of print and into, you know, more scalable stuff. Mm-hmm. And so we acquired some competitors of ours, started rolling up businesses during what we call crypto winter, which is, you know, these bear markets. Mm-hmm. And before long ended up owning, a good chunk of all of the media assets in the crypto media landscape. Now there's a lot more now with this last bull run, but I think in 2015 there was a moment there where we probably owned a third to half of all the media in the space.
Wow.
This was like the time that CoinDesk went bankrupt for like the second time, and I mean it was crypto winters are hard.
Yeah.
So,
and by the way, like this was something I got a taste of. Part of why that happens is because the people in the industry actually do business using crypto. Like they actually charge and exchange for services using crypto.
Totally.
Right. And so like when it's high, it's awesome. And when it's not, it's like, that's the value of the company. It's not like it's not like it's literal. It's literal. When that's what you're exchanging and that's what you're holding, mm-hmm. when it decreases,
totally,
the value of the service just decreases by the fluctuation in the currency, which is something like we talk about a lot with the dollar and the pound. But man, we really see it in crypto. Like you get a sense of like, this is why the value of a currency really matters to an economy.
Right. And, you know, to what we were talking earlier before we get on the podcast, and maybe we'll get back to this, but the leverage of brand.
Yes.
And, you know, when Bitcoin is hitting new all-time highs and investors are taking it seriously and they don't know whether it's legit or not, but they're looking for signals. And here you are, someone who's espousing this technology, your brand gets a big boost and your access to capital, your access to opportunities, et cetera, all grow proportionally. But in the bear market, you have the inverse. You know, your brand reputation goes down dramatically. Mm-hmm. And so now, you know, you seem less credible. You have less access to funding sources, et cetera. So there's this interesting contraction of interest, both from people inside the space that are like totally 100% in crypto and they have less money, and people outside the space evaluating, opportunities, and now they're just looking for signal, and all the signal says run away.
So I actually want to make that shift back to the conversation we had before the podcast, right? To talk about your business, which I said I think is a smart business, because if you're playing the long game, your business positions you very, very well. Now you have to be able to survive, but for anyone watching or listening, David's business is a media business, right? Fundamentally, and I think that position of influence, thought leadership, convening, especially around an emerging theme or an emerging trend or an emerging technology, is an incredibly powerful position because, as you said, when people are on the outside and they're looking, even if the signals right now say look away, if they get even an inch more curious, they're still going to say, well, who is the reputable voice on this, right? And so you've been able to put yourself in that position by accumulating all these crypto assets and being consistent, specifically on the media side. So like...
And developing the relationships, et cetera. We have a saying in our business that when no one knows what's going on, information is the best currency. So, our media is a core of our business, but... we've grown into a lot of other businesses around technology as well. And, we've gone from a print publication to, I think collectively we've raised, 30 something million dollars across all of our businesses. And all of that came from the relationships, knowledge, and market insight derived from our media business. And so, I consider all those things like ancillary opportunities that were created because of our core media business.
Yeah. And that you wouldn't have had otherwise.
Right.
So what's it like being, in the media business, in 2019? I mean, it's, we were talking about the headline recently around BuzzFeed and how the type of media business you're in is different from that type of business, and I'd like to talk about that a little bit. But just you've been doing this for 5+ years now. What's it like? What's it like being in the media business with sort of the constant evolution of the space?
Yeah, I mean, media is a shit business. I mean, it's hard. It's hard, and there's no money to be made until later. And so you're always just treading water today so that you can make it to that later opportunity. And so, we're fundamentally not in the attention business per se. We're really in the business of having a reason to work with companies so that we can know what they're doing and what's working in the ecosystem and developing relationships within those companies. That's the valuable piece. Telling the mainstream about what's happening in Bitcoin day in, day out. Not a ton of value there for us. So, we're not really trying to monetize in a traditional way with our media business. We hope we don't lose a lot of money there, but, it's not where we're looking to have our revenue and earnings. Personally, I don't do any of the writing at our company. I consider kind of the role I have as more the secret keeping business than the information sharing business. And, really gets down to having an information advantage and then being able to kind of embrace that information advantage and leverage it to the use of our company. Having an information advantage means that you oftentimes can't really share everything that you believe, that you just have to let people learn things for themselves. And, that can also be kind of frustrating and difficult as we kind of see a lot of bullshit in our space. And it's really not our role to call it out as bullshit. It's not our business, but it's also if it's not us, then who's out there doing it,
So one of the things we were talking about is that, you were very, very young during the .com boom, and I was looking to make a career when it was happening, and so you weren't able to leverage it because you ended up doing fine, but you weren't able to leverage it because of just timing. And for me, I got a career out of it, but I didn't really get significant financial benefit out of the boom. We're very, very early, even though you've been around for a while. And when you started, what did you say? You were one of the first 10,000 people globally that was involved.
I think the market cap of all Bitcoin when I got involved was in the tens of millions.
Yeah.
So
yeah,
it's tiny.
So one of the things that I'm curious about your perspective on is when you look at the history of the internet, right? It's like there was a first wave of companies. This would be your Netscapes, your GeoCities, they're doing a Nat Geo sort of documentary style movie about these companies right now that laid a lot of the foundation for the ways that we would utilize the internet, but they ultimately weren't the companies that best capitalized on the internet. Right. There was a second wave that sort of learned all of those lessons and then turned around, really, really executed, probably at an ideal time in the financial markets, particularly the VC markets, and achieved significant success. So, for example, there's a company that they cover on this Nat Geo series called theglobe.com that was very, very early in the free social networking business, but it was just really, really early. Right. And for lots of reasons, even though they had like one of the biggest IPOs in the history of IPOs, nobody knows who theglobe.com is. Right. Everyone knows who Facebook is, right? Being in the space for as long as you've been in, and we'll end up sort of using this as a segue to really dig into Bitcoin specifically. What are your feelings about the proliferation of other coins that happened, sort of, especially in the rise towards that last big, bubble that we just had, and the likelihood that there will be new iterations of the technology that could potentially really end up being the winners in the space? What are your thoughts about that? And feel free to tell me, here are the differences, and here's why that scenario won't apply here, right?
So I think you have to understand what part of the ecosystem we're talking about. And I think that when people start talking about protocols and tokens, they dramatically undervalue the business ecosystem that was developed on top of Bitcoin that makes Bitcoin useful and valuable, like the ability to buy it, the ability to have lots of apps to store it on, the ability to the robustness and anti-fragility of the ecosystem.
Yes.
And so if you wanted to start a new internet today, it's not just beating the technology that the internet was built on, it's beating it's the ecosystem that is built on top of the internet.
Right.
And people just don't appreciate how complex that is. It's really almost like a organic life first blooming and like quickly evolving into complex life. And you mentioned these internet companies. I think it's like a great parallel. If you look at Google today, it's like Google seems so complicated as a business.
Yes.
All right, but then you're like, all right, well, Google is really just a moderately better version of Yahoo, and Yahoo was really just a moderately better version of Jerry's List or whatever. Right. And Jerry's List was just him like picking out sites that he liked to add to a list, So it starts very simple and then it gets unbelievably complicated.
Yes.
So that's the same phenomenon that's been occurring in the space. And when I look at other tokens and protocols that are out there, first off, the onus is on those projects to explain what's different and why they're better fundamentally than Bitcoin. And then two, you have to also understand what are the places that a protocol actually is driving value. Like when you look at Bitcoin, what are the individual pieces of Bitcoin that are interesting? So you have things like, how are the tokens distributed? What are what's the governance mechanism of the protocol? What is the economics of the protocol, etc. So there's not that many kind of planes or surfaces to innovate on top of. There's just a couple kind of core pieces of Bitcoin that are unique that you can tweak. And a lot of these protocols out there are just kind of bells and whistles and flash, but they're not actually tweaking anything fundamental. I would put basically the coins that are out there in really maybe 4 categories. You have Bitcoin, which is the only one that is started at its ugliest and every day only gets better. So it was never worse than it was on day one, and it's only getting incrementally a little bit better every day.
That's a great way to frame it up. Okay, good. Got it.
These other tokens that are out there are really trying to recreate what made Bitcoin special, and they're starting from a much more I don't know if the right word is beautiful, but a much more kind of
well, they don't start with any baggage, right?
Yeah,
they start with a clean slate and all the promise of the future of blockchain.
Right. And the ability to point to Bitcoin and say, oh, we're going to be the next Bitcoin, which Bitcoin never had the ability to do that.
To anything, right. Okay.
So then you have another category of tokens that are, what I'm going to say, they have features that are interesting, but for whatever reason are unproven and too controversial to be added to Bitcoin. And the jury is out on whether those tokens have long-term survivability, because Bitcoin can always add those features in the future. I mean, Bitcoin's always changing. It's open source. It can evolve. It's just very difficult.
Okay.
So tokens that do like privacy better. Privacy is a big issue in Bitcoin. That's a legitimately useful thing, but Bitcoin hopefully will get that feature one day.
So in that world, is that Zcash, Monero?
Zcash, Monero, Dash. There's Mimblewimble, which just had a coin go out. There's probably like 20 projects out there, each having their own kind of flavor. And then there are protocols out there that are using a different consensus mechanism. So Bitcoin uses proof of work. Yeah. Proof of stake is the only other used system, or delegated proof of stake. There are benefits to proof of stake, but the technology is considered largely unproven from people who know what they're talking about. Okay. And that there are some game theoretical issues long term in proof of stake. And we haven't seen a successful large-scale proof of stake project.
So I want to dig into the statement you just made about the technology is considered unproven by people who know what they're talking about. So go a little further on that one.
So to understand, to know what you're talking about in this space, it requires you to have a multidisciplinary approach to information. It's not just like, all right, this is how the code works. It's also about like, all right, well, this is how the economics work, and this is how the monetary policy works, and this is how the game theory works. And so there's a lot of different disciplines that play at the same time.
That makes sense. I got that part.
And so in Bitcoin, you use proof of work, meaning that you have to expend real power, real energy, in order to influence the protocol itself. Like you have to spend money in order to have hash power, and hash power is what determines what is the legitimate chain, effectively.
Okay.
With proof of stake, you don't have that ongoing cost to participate. And so like, let's say someone gets hacked, an exchange gets hacked, and 15% of all tokens get taken from that exchange. All right, well now that person who stole that...
And those tokens are used for the staking.
Right, they're used for the staking, and that's the governance mechanism.
Right.
Well, now someone who has no ongoing cost for holding those coins now has governance control over your system. And so like when this happened in Ethereum, there was this thing called the DAO. 15% of tokens were taken, and they had to literally hard fork Ethereum and split it into two to undo the hack, because it would have potentially crippled Ethereum in perpetuity. All right, well, you know, there's this saying in Bitcoin, like if something can happen, it will happen. And so if there is a game theoretical flaw or some tail risk event that could destroy a proof of stake system, if that system gets big enough, it will eventually occur.
Yeah.
And so that's the reason why it's unproven. But the jury's out. We'll see how it evolves.
No, I'm glad I asked that question, because I think that scenario was a good one to sort of flush out. So thanks for digging into that.
So that's the proof of stake camp. And then the last category I'd use is scam protocols. And then tokens, if we're talking tokens broadly, those can be issued on a protocol. And so, you know, those are like digital assets. And that can be built on top of Bitcoin or any of this proof of stake systems or any of the protocols. So that's the landscape. I am personally of the opinion that Bitcoin is 2 orders of magnitude further than any other ecosystem in the crypto space. You know, there's probably only 50 million people who have ever touched crypto in the world. And so that's not a lot.
It's not a lot.
There's probably only 30 million plus or 40 million in Bitcoin. So someone can beat Bitcoin, but they have to beat Bitcoin at its own game. And how? It's like, and what's the advantage of trying to beat it at its own game when you can just join it as an open source system? If you're trying to start a new system that you have some advantage in, well, why should anybody else join your system? So there's this interesting game theory that's going on that I think makes it so the game theory optimal thing to do is to join the biggest open source system rather than to create your own. And Bitcoin is that system.
Yeah, so let's talk about that a little bit. So the joining of Bitcoin. How does one join Bitcoin? So as someone who came into it sort of a little bit later, and my background is not finance, my background is technology, right? And so my analogy to it is, the open source communities that I was a part of. So I was a part of the PHP community. I was not a committer. I did get to the point where I had, the ability to commit to the core code base, but there was very much sort of it was a meritocracy, don't get me wrong, but the time it took to develop merit was significant, right? And also I think the bar was very high because your knowledge of the overall platform, needed to be really, really high. Your skills in computer science needed to be really, really high. And so the number of people who could actually have real influence on the future of that language, was limited, right? Based on how much time you were willing to put in, what your level of expertise was, what contributions you had made in the past, how much you had sort of developed relationships within the community, right? For just doing work, fixing bugs, things of that nature. When you say get involved in Bitcoin, I think about, the Bitcoin core team, the team of developers that for a very long time had been working on Bitcoin. How does one, in an open source way, because we're going to get into the fork thing in a second here, right? How does one get involved in Bitcoin other than just buy it, right? You know what I mean? If you're not going to be a core dev,
right?
What does that even look like?
Right. Or build all the stakeholders who make it up. So whether it's you're a user or and that has no exposure to the price, or you're an investor who's buying and holding, or you're an entrepreneur building a business that's leveraging the infrastructure, or you're a developer contributing code to the core protocol. So it's for all of those people, they want the fairest system to be a part of, or they want the system that's most fair to them. All right. That's like, those are the two options you're looking for, right?
Okay.
And so because everyone wants the system that's most fair to them, that option's off the table. So then the other option is the one where no one has an advantage, right? In terms of the core code itself, it's a messy process. It's not, it's based on consensus, and what that means entirely, is not 100% clear, because consensus can mean 999 people out of 1,000, or it can mean 1,000 out of 1,000, depending on who the person who's saying no is. So I mean, it's it's not a true democracy. It's like a messy meritocracy. So
that resonates with what I was used to. So that's what I was thinking.
And because of that, you start introducing some politics, and you start introducing a wide range of opinions that make it very, very, very hard to formulate consensus on changes, which means that changes don't happen at the base level as fast as they can happen elsewhere in other protocols. That's both a strength and weakness.
And that cadence of change, I think, is a major that's a major catalyst for the forks that we see, right? It's like people who don't want to spend their time working through that process to see change say, well, I have the option to simply fork this and then do whatever I want to do with it. And I think that ability to do that, was baked into open source software far before this, which is a beautiful, beautiful thing. In this particular situation, so like, for example, like just take Linux, right? You know what I mean? It was great because you got to have all these different flavors of Linux, and it wasn't about a network, right? You know what I mean? It was just about having the Linux kernel and the Linux distribution that you wanted to be able to have because you wanted it to have these features, or you wanted it to function a certain way. You wanted to manage memory a certain way. That was brilliant. When you're talking about forking Bitcoin for the purpose of like running a new network. And like you said, all of the things that go along with that whole ecosystem of, wallets and dashboards to be able to see, check on your transactions, just all of those types of things. It takes the forking thing to a different place, right? In terms of like, is there an upside to actually forking or not, right? And so that's like let's start talking about that a little bit, right? Because you were saying, you asked me when you first got here, did I know about the wars? And I have been following, right? Enough to know about the initial BCH thing, and then I kind of turned my head and I came back and I was like, oh my god, now the BCH guys are fighting with each other, right? Right. It's like the fork of the fork of the fork, and it sort of just shows that the personalities that would fork will fork again, right? Like what they've proven.
There's no shortage of personalities,
right? Exactly, and they've proven that by their willingness to split off in the first place, they'll split off again and again. Like it's not about sticking in there and that feels to me like one of the most fragile things about the forks in the first place is that they are ultimately driven by the personalities, right? And if someone doesn't get their way, then they are absolutely willing to sort of take their cards to another place.
Right. And, it may be possible to fork Bitcoin right now and exactly copy Bitcoin, call it a different name, and outscale Bitcoin and beat Bitcoin at its own game today. Like if you're Facebook and you just duplicate Bitcoin, you call it Facebook coin, and you just we're putting 100 billion.
But you would need a brand and the kind of infrastructure that a Facebook has to do it.
And they need to go right now.
And by the way, they may be doing it right now, right? I mean, like there have been rumblings about them getting into crypto and then hiring somebody for this, right? I mean, so it is entirely possible that they will do this, right?
So like an Android, iOS, anyone who has a really big platform with a lot of distribution, their smartest thing that they could do is just duplicate Bitcoin, give themselves 5% of the coins, and then just exactly copy Bitcoin. And they could outscale it. But if they don't do that in the next 5 years, when Bitcoin's at a couple 100 million users, it'll be too late.
What's it at now?
30, 40 million.
30, 40 million.
And less.
What's the growth curve?
Growing an order of magnitude every 3 years.
Okay. All right.
Yeah. Faster than the internet.
That's fast.
Faster than the internet.
That's fast.
So I would consider, like, when I got into Bitcoin, the equivalent of like the mid 80s maybe in the internet.
Yeah.
Like we're still we don't have an AOL yet.
Yeah. Yeah.
So
that's crazy because the numbers don't reflect that. But it's yeah.
People just don't appreciate how big this can be. So it seems like it's really far along because it's a $100 billion industry. It just demonstrates how big value is as a concept itself. Right. So the consensus is really important, and this game theory of not trying to create a walled garden anymore, but join the biggest open garden. Yeah. Not trying to create your own version of email, but join the system that's compatible with the most email addresses. That's what Bitcoin really represents. And the forks that happened were people challenging that contention, and those forks have come to a resolution. They've basically all failed. I mean, they're on their dying deathbed, and I'm sure Bitcoin Cash will be 51% attacked any day now, and that'll be it. So it's reinforced like how difficult it is to do that, and it spooks people that no one is in control of Bitcoin. Yeah.
We need to get into that in a second here, but keep going.
And that's part of it, but Bitcoin's biggest strength is that no one is in control of Bitcoin. Yeah. Like if someone was in control of gold would be worthless. Mm-hmm. It's the fact that no one controls it that makes it valuable. Right. Same with Bitcoin.
So
even it's so crazy. Even the major players, like the whole Bitcoin Cash story told us, like even if you get all the biggest companies in the space to collude, and you get the biggest miners in the space to collude, and you get the biggest investors in the space to collude, it's still not enough. So it's like, literally, truly, even the people that people think are in control of Bitcoin have no control over Bitcoin.
Okay, so let's circle back now to your advantage of information, to you being a secret keeper, and to you leveraging that. You know, I know that you, when I say you, now I'm talking about your organization, but you guys, you know, did have at least one successful, you know, ICO, and you've got a portfolio of assets, and some of those include tokenized networks, right? That are blockchain based.
Yeah, we have a whole business built on top of Ethereum, another protocol.
Right.
Yeah.
Yeah. So help me to reconcile where would you objectively put that business in your class of 4?
Yeah. So I would put that business as Poet as a digital asset issued on top of a proof of stake system, Ethereum.
So you put it in the proof of stake
bucket, right? I put it in the experiment bucket.
Okay.
And I would say, like, actually, so the token runs on the Ethereum protocol, but Poet, the application itself, runs on top of Bitcoin. So we did design it to do that, but I'm bearish overall on Ethereum. I mean, so I'm not sure.
I mean, the market seems to go along with that. I mean, it's crazy how fast it rose and how quickly it's declined. And I feel like it was the lead horse for so many similar application-based networks. So it feels like it pulls a lot of things down with it as it goes down. It's not just itself.
Totally.
I mean, it feels like there's a whole class of coins that were very, very hot topics, right? A year and a half ago, right? That right now it's like, it's interesting.
Yeah,
I mean,
and the monetary system built around it doesn't make sense.
Yeah,
and so
and by the way, is that because of gas?
It's gas and infinite supply.
Yeah.
You know, some things that just never really quite made sense. And so, you know, I don't know how it will all play out. I will say, to the benefit of Ethereum, it has by far the second most robust community in the world as a protocol. So nothing else comes close. So that's impressive. What I think that
do you think that community, I mean, you just said you were bearish, but I mean, do you think that community can get it figured out? Are those problems so baked in that they can't be resolved?
Bitcoin has taught me that no one has any idea truly what they're talking about, and so I have no idea.
Yeah, okay, great.
I remain open-minded, and please.
I love that answer. I'm totally cool with that answer. I just wanted if you had like a definitive opinion on it, or you're like, no, I mean, we'll see.
It's a huge mountain to climb.
Yeah.
But that's not to say people can't climb Mount Everest, you know? So we'll see. So, you know, these other businesses, I look at ICOs really more as an abstracted idea of really what is permissionless value. What's the purpose of permissionless value? And so an ICO is really about the capacity for people all over the world, no matter who they are, to be able to instantly send money to participate in an investment and to be able to get an asset in return that tracks whatever the investment is that they're making, and to be able to do that frictionless at any time and have liquidity to sell their investment back into the marketplace. Like, that's what ICOs represent. And whether it's happening on Ethereum or happening on Bitcoin, the first ICOs were on Bitcoin. You know, it's really a much bigger idea of what starts happening with financial applications when there's no friction in the system. And, you know, I think the story of ICOs are just in their first chapter, because you know, the biggest ICOs that have happened in the world have had 50,000 investors, the biggest ones, and those are ones that have raised billions of dollars of money. What happens in the world?
That just shows you what an inside game it really is, though, right? I mean, when you looked at the numbers and you realized there weren't that many people and the amount of money being raised was so significant, it was just like,
taking
earnings, reinvesting the earnings, you know, making more, like it, you know.
So for Poet,
it's not quite pump and dump, but it's
So for Poet, we raised $11 million in roughly 10 minutes. All right, we had 3,000 something investors make up that 10 million. That's an average investment of $3,000 per person.
Okay, but did it really average out $3,000 a person? Like I get the math, the pure math, but was that the reality?
So
and you don't have to tell me.
Sure. So
I'm just skeptical about how that math actually plays out.
So we set up our sale. We had a couple institutions participate early who had bigger stakes.
Yeah. Okay.
But then we put in. This was when the market was so hot that you turn money away, and so we put in logic that you could only put in, the biggest investors could only invest 100K. And there was like 10 spots.
Okay,
and
so
then 50K,
you had
and
limits.
20K.
You had limits.
Yeah.
So you sort of did force some actual true balance there.
Yeah.
Of like,
you want a big community. Yeah.
So
So
okay, great.
but I think the point that I was driving at is if Bitcoin becomes ubiquitous or digital value becomes ubiquitous, you'll have ICOs in the future that have 50 million participants, not 50,000 participants. And, if those participants are driving a couple $1,000s a piece, you're talking about being able to crowdfund something overnight that could be worth more than a Fortune 500 company. I mean, overnight.
Yeah.
And that is really a democratization of our financial system, where really you can live anywhere, and now you can have access to the same capital market someone in New York has access to. Okay,
so let's talk about what that means in today's geopolitical environment, right? So we still have first world countries and third world countries, right? And we have countries that have looked at blockchain and looked at Bitcoin and said, hey, this is something we can really embrace, and we can make it an advantage for people to want to do business in our country. And Malta comes to mind. I'm hearing about plenty of people, especially U.S. citizens, moving to Puerto Rico to establish
avoid taxes.
Yeah. But at least the way they're framing it is to set up a society where basically they're going to exchange value for services in crypto, and I just think that's a very interesting thing, because at the end of the day, the currency is just there to be an intermediary between the value exchange, right? And so if you really did create a society, the taxes thing aside, which I get that, because that's the practical piece of it. But I mean, I do think you get a critical mass of people that actually okay, hey, we all have the tools, we all have enough of this to keep passing it around, and we have the critical services amongst ourselves. We can now create this society where we have a currency that we can operate with, independent of, so because what I struggle with is currency is a asset, but I mean this from a leverage perspective for nation states to use. It's a mechanism of control, it's a mechanism of tracking, it's a mechanism of lots of things, right? You know what I mean? The ability, the Fed, right? I mean,
and a consensus mechanism is the military.
Yes. Yeah. Yes. And so, as a venture capitalist, the thing that just wore me out about the ICOs was, man, the regulatory piece. It's just it literally wore me down. You know what I mean? It was just this is taking so long, and I could be spending this energy, at least right now, on other things, and I'm not going to lobby for them to figure this out. You know what I'm saying? So, at least for now, I'm going to chill on this, and kind of let this play itself out a little bit, because I'm not going to jail for this. You know, this is that doesn't make any sense. So, what are you? When I look at ICOs, I'm just trying to figure out, what is the situation, the scenario in which they can actually thrive? Is it they all operate in jurisdictions that totally allow them, and there's some mechanism through which that works, or what does that look
you
like?
have some so it's wild west, so you have lots of scam projects right now. So you have non-scam projects playing,
which is the issue for the regulators, right? That's the
which is totally fair,
more
than fair. Yeah,
we get that.
So what will happen is you'll have non-scam projects with legitimately cool uses for their token, or for the tokens and actual ownership in the business, that are playing regulatory arbitrage and will run from countries around the world where U.S. regulations can't be applied easily. And there will be so many of them that proliferate, and they get so big that they force the hand of the U.S. regulators to change the securities rules so that ICOs can be done legally within the United States, or they will put American business at a disadvantage.
At a disadvantage.
That will become increasingly more apparent as more big businesses.
Are we on the way there right now? Like, because it felt to me like the market, like one of the byproducts of this bear market, along with they kind of fed each other, right?
Mm-hmm.
Like the regulatory uncertainty fed the bear market, fed the regulatory uncertainty, fed the bear market, and it sort of it felt to me like the activity decreased.
Mm-hmm.
So what I mean, I hear what you're saying, but it feels to me like there needs to be an increase in activity to start to create that pressure. And right now, maybe now more than a year ago, and certainly more than 2 years ago, it feels like the government feels like they have more time. You know what I mean? Than they did before. Like the pressure feels like it's decreased a little bit.
Right, which is why they won't do anything.
Right.
Until the next bubble.
What's the thing?
The next bubble.
Okay. What makes these bubbles happen? Because this is where somebody like you who has seen these bubbles several times over, and this could be one of those secrets that this is that you don't share. But like the mechanics of what makes these bubbles happen is completely out of my I don't understand the mechanics of it at all. Right?
Yeah.
And so I wouldn't know what to look for at all. You know?
So I'll answer this question, but then I want to come back to the question you're asking about the broader geopolitical implications of permissionless value.
I want to do that
because that's the macro view that gets, I think,
that's the exciting one,
yeah,
right?
Yeah.
I mean, like is and exciting in terms of lifting up people in the world who currently are in places where there's oppression.
Absolutely.
And, like that's the reason,
like
right?
the lifeboat for those people.
Correct.
Yeah.
Correct. It's because there's an alternative to the current system which doesn't work in their favor at all.
Right.
Okay. Great. So
why these bubbles happen? So this is actually a theory I developed. I've used it and applied it on Twitter very publicly.
We got the disclaimer.
Yeah. It could be completely wrong, but so far it's been more accurate than anyone else's out there.
Okay.
All right. So,
and most of the ones I heard have not been accurate, and especially last year.
Yeah.
Especially last year.
So January 2017, price of Bitcoin's $1,000. Called 15,000 by the end of the year, and then I called $3,000 by 2019. So it's played out pretty well.
Okay.
But basically, what happens is you have the price of Bitcoin is determined pretty simply by the amount of demand that's coming in for the system from fiat and the amount of fiat leaving the system. Right. Mm-hmm. Those are like the two simplest drivers. Right. Got it. There are two demand curves that drive the amount of fiat coming into the system. And for people who don't know what fiat is, fiat's just government issued currency.
Your dollars, yeah.
So there's a price insensitive demand curve, and there's a price sensitive demand curve, which you can call the speculative demand curve.
Okay.
So the price insensitive demand curve is people that want to use Bitcoin to do things that can only be done with Bitcoin, and they don't care what the price of Bitcoin is because they're trying to do something that's priced in dollars. I want to go buy $100 worth of marijuana online. All right. I'm going to use Bitcoin. I'm going to take $100, buy $100 worth of Bitcoin, and I'm going to send the $100 worth of Bitcoin. I don't care if it's $1 million of Bitcoin or what.
Yeah.
I want to gamble on the Super Bowl. I'm going to use Bitcoin.
Yeah.
I want to send money home to the Philippines with my family. I'm going to use Bitcoin.
Yeah.
I want to sneak money out of China. I'm going to use Bitcoin.
Yeah. Okay.
So there's just a million different reasons around the world, right?
Got it.
Well, that's a linearly growing demand curve that is always getting a little bit bigger, but it doesn't rapidly. It's just a linearly, maybe a little bit faster than linearly growing.
There's not a trigger that spikes that need.
Correct. The speculative demand curve oscillates around that non-speculative demand curve. So when the price of crypto is down, it's putting a lot of pressure on the sell side. When the price of Bitcoin is going up, everyone and their mother wants to buy Bitcoin, and it's amplifying the price dramatically. That's just those people have no. They're just speculating on the price action. They're not speculating on the underlying technology or utility.
Yeah.
And so they are a net neutral, except some people end up learning about the technology through speculation and they stick, but that's the minority.
Yeah.
So those are the two curves. On the money leaving the system, you have miners selling to cover probably the primary expenses. Miners selling Bitcoin to cover their energy cost, which is substantial, billions of dollars. You have people who are holding Bitcoin who are selling it to pay employees or selling it to buy things. And as the price goes up, that's more and more pressure as they're selling for.
Yep.
And those are really, and you have speculative sellers. So those are really like the three main buckets.
Okay.
All right.
Okay.
So these two forces meet equilibrium when the market is in these calm periods, like let's say 2012 or 2015. What we consider crypto winter is basically where the market floors and it hits the real demand curve and it just flatlines at the real demand curve. All right. And maybe, there's an incremental demand, but it's not anything that would cause a speculative mania. Mm-hmm. But then every 4 years, you have an event called the halving where the supply overnight gets cut in half, 50%. So you had this price equilibrium, then all of a sudden half as much mining of coins are hitting the market from miners overnight. Well, now the price has to start going up to create a new equilibrium. And so it starts slowly going up every day, just a little bit. And then people are like, price is going up. Anybody see that Bitcoin's up 50%? So a few speculative buyers start coming in and they go from speculative buyers to start being like speculatively neutral. Yeah. And then they become buying a little bit. And it starts picking up speed, and it snowballs until it hits some point of unsustainability where the amount of money coming out of the system is so great that nothing can feed the beast any longer, and it just implodes. And then the whole next year is just Bitcoin trying to hit that price insensitive demand floor again.
To get back there.
Right.
And that's where we are now.
Right. And then builders this whole time are just building the infrastructure that laid the foundation of the next bubble. So like the ETF.
So what is that, another 2 years?
Yeah, 2021 is what I think. Yeah. And then I think there's so much money in the world. Like I think
why does it so now I've already told you how uneducated I am about this, and we have to go back to the geopolitical thing. We're approaching an hour. Why does it feel to me like this is about the right price?
Why does it feel like the right price right today?
Yeah. Why did, to me, when I'm looking at it, I'm like, yeah, this feels about for the
purely psychological.
Yeah, it is, right?
Yeah.
It is. I mean, like I watched it, I would say pretty closely for 2.5, 3 years, and this is what roughly through all those curves, really like a 2x of what it was 2-3 years ago, like.
Well, 2 or 3 years ago, we were at $200.
Okay, so it was 2 years ago, because 2 years ago was when it went like in January. I remember I was in London, and it went from like was that when it was 3 years ago? It went from 200 to 1,000 in like 30 days.
No. So
when was that? It was in January.
So I think we hit like that would have been like probably January 2017, and
yes.
So
January 2017.
Yes. So and during these bull runs, there's all sorts of like little booms where it goes up to 2,000 and then drops down to 1,000. And everybody's like, oh, maybe the bubble's over or whatever, So there's all these like little micro events, but it took about a year and a half for the price to go from $200 to $500.
Yeah.
And then it took about 6 months for the price to go from 500 to 1,000.
Got it.
Then it took 8 months to go from 1,000 to 3,000, and then it took 3 months to go from 3,000 to 20,000.
So the point is, there's room for more bottom.
There's room for more bottom. I think we're close to bottom personally. There's room for more bottom. There's room for more bottom. The reality is that the price of Bitcoin is one of two options. Mm-hmm. It's a binary outcome. Mm-hmm. If Bitcoin is a store of value, then it will consume all value. And it will become all value in the future. Like gold's dead if Bitcoin is a store of value.
Like this is the long-term view for people who can afford to play a long game with their
hundreds of years.
Right.
Or Bitcoin's not a store of value, in which case it's going to zero. Like those are the two outcomes. I am in the camp.
Great.
That's great the reality.
That's great framing.
So any price between
that
zero
really
and
does
infinite
that really does make it such that it's like you should put something in it.
Yes.
Right? I mean because that shift is so monumental that like you should be in it to some degree.
Even if there's a 1 in 10,000 chance.
You should be in it to some degree.
Right.
Like buy one, buy half of one. Like it might not
$100.
even matter. It might not even matter. Just to for that long-term chance.
But, yeah, I mean, in the long term, there is no price of Bitcoin because everything's just priced in Bitcoin, right?
Everything is just
but
Bitcoin.
I mean, I think 2021, we're going to be hundreds of thousands of dollars of Bitcoin. 2025, we're going to be in the millions of dollars per Bitcoin. And then we start getting into hyper Bitcoinization where so many people are holding Bitcoin that government-based fiat systems start failing, which then is what we call hyper Bitcoinization, and things go really crazy, especially on the geopolitical scene. So there's a whole world of stuff that can be talked about there, but I'm a big believer that Bitcoin is a store of value, and I feel like all the evidence is out there for people to see it. And if it is, our entire system as we know it globally will be redefined around it. I really look at what we have with Bitcoin as digital gold, and to find a parallel, you have to actually go to the emergence of gold in the first place in what we call the analog financial system, right? The real world. Well, from gold, the entire financial system that we know today was built on top of that initial premise of a store of value. All right, well, hey, we're going to take your gold, we're going to put it in a bank, and we're going to give you a coupon to come get it. And then later we're going to just hold the gold ourselves and we're going to issue our own coupon that's going to have some floating rate. And then we're going to use those coupons in order to start building a banking system where you can borrow and lend. And all that stuff gets built on top.
So here's a great question about between now and 2021, because there was a lot of rumblings about this, and then like I didn't see it happen, but I've seen enough intermediary steps for you to see a path to it happening. When is Fidelity gonna let me take my retirement?
Already can.
Okay.
That just happened recently.
So it did happen, and I just didn't see it.
Yes, which is crazy.
That's crazy.
That's the mainstreaming of it.
That's crazy, and I didn't even see it. Okay, that's awesome.
And so I mean, this is the financial system that we have today took a very long time to build. But it all started on that store of value. Yeah. So we're building a new financial system in the digital realm built on top of digital value.
Yep.
And that scales to everything that exists in the world. So in terms of the geopolitics of this, the power to mint money is the way that governments around the world have control. That's how they pay for the military, which is the consensus mechanism. Yeah. It's how they pay for all the government handouts and bank bailouts and corporate bailouts and all the bullshit that they do. That doesn't become possible in a world where value is no longer minted by a government. And that's an interesting spot to be in. It's an interesting spot to be in. I mean, we live in a very privileged society. Bitcoin represents a value and financial system without privilege. And the winners in that system are going to be those who are the losers in our current system. And the losers in the privileged system are going to be us.
Again, back to being binary.
Yeah.
Right. I mean, it really is winners and losers when the switch flips.
Right. I mean, 80% of the world makes less than $10 a day.
Right. I mean,
that's unbelievable.
Right.
And Uber taught us that any person who can have some basic skill can make a basic living. All right.
Right.
So, why is it that all of these people...
And industry hated it, but it has radically changed quality of life because it's democratized opportunity for people to make a living, and it also improved the services in the community. It's just like... Right. I mean, there's no question it was a net plus.
Right.
There's no question. Now, the industry that had a monopoly on it hates it.
Right.
Because they invested in something that they thought was going to last much longer than it ended up lasting, right? And they tried to legislate and regulate it away. But I mean, for society, I'm just trying to reinforce your point that, like, yes, like these things are good,
right? And for the vast majority, I mean, you have 2 billion people making less than $2 a day. So the internet represents unbelievable opportunities for the world to have a better and a different way of life than they have now, but they have to have a value system in order to make that real in their real lives. And so, I feel like we sit in this place right now in time where it's like, this is the dark ages and the United States government is the Catholic Church, and they have controls over the temples of power. And the printing press was invented in the 90s, the internet. And the triple entry accounting system was invented with Bitcoin. And those two technologies mirrored together are going to create banking, stock markets, and all the financial tools that enabled us to go from the dark ages to the Renaissance to the Industrial Revolution to where we are today. And like, I see the internet and Bitcoin joined at the hip of this basic underlying need that people have to communicate information and then to be able to collaborate around that information in some sort of commercial way. And if you can do that via the internet for the world, you can lift the world out of poverty. And the amount of business opportunities that will be created from that are immense. The amount of Alibabas that can be created, that the guy's a farmer right now, and he just doesn't have access to the tools, but with Bitcoin, with the internet, now is going to build the next Fortune 500 company. Like, that's what all this technology is bringing. And, you know, that's unbelievably exciting for real people. It's unbelievably scary for people who control the system as it is now and are living very happy.
Right. Yeah. No, I mean, that's the dynamic of power. Okay, man, this was incredible. We're gonna have to bring you back for another show, but we'll let some time pass. Let's just see how much things change.
Hey, 2021, let me know. We'll do a follow up on this.
Yeah, no, we should definitely follow up next year. And then just one last thing, your Bitcoin event, because by the time this goes live, you know, your announcement will already have happened. So when is your Bitcoin event going to be?
Yeah, so we're doing a conference in San Francisco this summer, June 25th and 26th.
Okay.
Called Bitcoin 2019. It's a redux of the first Bitcoin conference, Bitcoin 2013. And it's part of what our campaign that we're trying to get the community rallied around called Make Bitcoin Fun Again, which is really about moving the narrative beyond scaling and allowing all of these people who were part of the Bitcoin community but splintered off for different reasons to have a friendly environment to return to, so that we can kind of unify around what we agree on rather than just be focused on where we disagree. A Bitcoin Cash person and a Bitcoiner are 99.5% the same. The fact that they're diametrically opposed is ridiculous. So we think that this bear market is a really amazing opportunity to change that dynamic. And we have Bitmain, who is the biggest miner and biggest supporter of Bitcoin Cash, being a big part of the event, sponsoring. We have Blockstream, who's the diametrically opposed opposite of Bitmain, doing the same. And so it's that's the first time that's happened in like 3 years. So
that's amazing.
We're amped up about it. We think if we do a really good job, this could be a big moment for the Bitcoin industry to move beyond all the bullshit that we've been going through for the past few years. So
amazing.
We're excited, and we hope we see a lot of people there.
Awesome. I hope to be there too. So I hope you learned a lot. This was not a Bitcoin 101. This was a masterclass. So if you got lost, there's a bunch of stuff on YouTube you can go check on to like understand the backstory here.
Check out bitcoinmagazine.com.
There you go. There you go. So this was incredible, David. Thank you so much. Appreciate it, man. Until next time. See you. Peace.